What do I mean by that? All you got to do is look at the charts to see what I mean. So first of all, look at the last 3 weeks on Bitcoin, right? 3 weeks. I would argue that this is 3 weeks of bullish behavior. You're above the 200-week moving average. That's really important. You're consolidating below the 236 Fibonacci. That's also important. That's relevant. That implies that there may very well be a breakout above the 236 in the relatively near future, right? So bottom line, Bitcoin bullish, right? Like continues to be bullish, like potentially in a significant uptrend here. But let's look at the XLF. This is the ETF that represents the financial sector. I'm actually going to look at this on the weekly chart. So what do you see the past 3 weeks on the XLF? Horrific falling price action, right? And also below the 200-week moving average. This is part of the paradigm shift. This is part of this idea where the markets are not moving in unison. They have been moving in unison since March 2020. And obviously, even you could go back to, say, 2008. They've really been moving in unison since then. I would say this is the first time that we can significantly see that the markets are not all moving in the same direction. Very, very clearly. I'm looking at weekly candles here, right? 3 weekly candles on the XLF. This represents the big banks, the regional banks. All of the traditional financial sector is represented by this ETF. So if you see 3 weekly candles to the downside, like rapid selling to the downside, that tells you something is not going well in that sector. By comparison, look at the freaking NASDAQ. What is going on here? Look at the last 3 weeks on the NASDAQ. 3 weeks ago, we had, I guess you could say it's a bearish candle, but that bearish candle looked like a back test of the almighty trend line, right? And then what happens? You have 2 bullish candles following, right? This is in the exact opposite direction as the XLF. This is pretty interesting. You rarely see anything like this. And then let's go over to gold. Look at gold on the weekly chart. Last 3 weeks of gold, relatively bullish. This week for gold looked like it was a back test of this major trend line. And so even though this candle closed slightly red, it's basically a bullish candle. This looks like gold is likely to continue to the upside, at least in the short term. Let's take a look at silver, right? Silver, also interesting. Now, harder to tell what's going on with silver from the weekly chart, but I would say that this could be the start of maybe like a major double bottom pattern. Like this could be bullish, right? You have the low and then you have a high and you've now set your higher low. We're looking for that higher high on silver. My major point here is that gold and silver and Bitcoin are all moving in the same direction. Okay. And in the NASDAQ, sorry, don't forget the NASDAQ, gold, silver, Bitcoin, and the NASDAQ are moving in the same direction while the financial sector is crashing. Now, let's just talk about what happened this week with Powell, right? He came out with the 25 basis point rate hike. So what does this do? This effectively puts more pressure on banks that we now know are borrowing bonds, right? So the value of the bank's holdings in bonds is going down as interest rates rise. So this is something worth examining here. The whole mechanism that drives the value of bonds. And of course, it's related to interest rates. On a basic level, interest rates going up means the value of bonds are going down. And what we now know that it wasn't really clear 2 weeks ago, we know that the banks are heavily collateralized in bonds. So if the Federal Reserve continues to raise interest rates and the banks are holding bonds, of course, the value of the bank's balance sheet is continuing to decline. And like I said last week, the market is smart. People understand this stuff. And that's why you're seeing some of these bank runs, okay? So let's just talk about why bonds go down in value as interest rates go up. So here's the thing we want to check out here. This is the TLT, right? So the TLT against the federal funds rate, my favorite little orange line here. This is the federal funds rate down here. This is the TLT above. So what is the TLT? The TLT is an ETF that represents the spot price of bonds. The spot price. So the spot price is the thing that is going down in value as interest rates go up, or the spot price is going up in value as interest rates go down. And this juxtaposer is a perfect way to kind of show that. So look at the TLT. Where is the all-time high of the TLT? It's literally March 2020, right? Like, no surprise there. Like, that shouldn't surprise you at all. And then what are the federal funds rate doing on March 2020? They had literally bottomed. So this is when the stock market crashed, crypto crashed, right? Interest rates coming down, market is crashing. What is rising? The value of bonds. Why is the value of bonds rising when interest rates are crashing? Well, that's because as interest rates fall, all of the bonds in existence become more valuable because they're offering a higher rate of return. So now what's going on here? Look at this. Interest rates rising, the value of bonds falling. That's because all of the bonds in existence are offering a lower rate of return than the bonds issued in the period after interest rates have started to rise, right? So this is why the TLT is descending. This is why the value of bonds is descending. It's because all of these bonds that were issued in the lower interest rate environment offer a lower rate of return. Therefore, they have less value than bonds that have been issued in the environment where interest rates are higher, right? So the banks, like Silicon Valley Bank, Signature Bank, all the regional banks that you can think of, they're holding bonds that were issued in a low interest rate environment, right? Well, now interest rates are rising. So all the bonds that these banks are sitting on are now becoming worthless, because why would anybody want a bond that is offering a lower interest rate than a bond that you could get today that's offering a higher interest rate, okay? So maybe that's a little confusing. Just rewind the video like 10 times and just listen to me say that a bunch of times, because it will start to make complete sense. It's basic supply and demand stuff, Of course, you want a bond that offers a higher interest rate, right? So that's the first level of understanding. But the real point that I'm trying to make here is Federal Reserve this week raised again by 25 basis points with the knowledge that banks are now starting to fail because of this higher interest rate environment, which is putting downward pressure on the value of their bonds, right? So the point is, if the Federal Reserve raised rates again, knowing that this is going to put pressure on the banks, that is telling you that there is very likely another major crash coming, and it's on purpose. It's a purposeful crash. Because if you think about the logic of what's going on here, the whole mechanism of making regional banks collapse, it's obviously a scare tactic, and that scare tactic is designed to put people in the larger banks like JP Morgan, Wells Fargo, these larger banks, to centralize the banking even more. So the purpose of a crash in this situation would be to scare everyone out of the regional banks and into the banks that are more closely associated with the central banking system. So now what we start to see is a situation where it benefits the United States government and the bureaucrats to actually sort of cause a relatively catastrophic event. And I do think that's what's on the horizon. But what's really interesting, and this is maybe something that the Federal Reserve and the bureaucrats haven't really accounted for, it's surprising that crypto and tech and gold and silver are continuing to move to the upside with all this fear. So my question becomes, is this sort of like not going according to plan, right? This like, they call it a soft landing, but I'm telling you, it's not going to be a soft landing, right? These banks are going to start dropping like dominoes. They're going to continue to drop like dominoes. And that's clearly what the Federal Reserve wants, because they're still raising interest rates as we're seeing the banks collapse. So if I'm the Federal Reserve, I'm thinking like, looking all throughout history, all the markets move together. So if we're going to crash one sector of the market, we're going to crash the whole market, right? But that's not what's happening, which is insane. Like, even to me, this is like mind-blowing. Like, how is it freaking possible that the NASDAQ is holding up really well, potentially going to see more follow through to the upside as the entire financial sector falls? Like, what? This is insane. This has just not happened before. So if I'm the Federal Reserve, I'm thinking like, wait, why isn't our plan working in the tech sector? Why isn't it working in cryptocurrency? And it's like, because it's literally like what I said before. It's like they're trying to cause a controlled forest fire, but it's like the Santa Ana winds are blowing at 60 miles per hour. Like, you're not going to be able to cause a controlled forest fire. So what happens is all the people who see what's going on and are way smarter than the Federal Reserve gives them credit for are starting to realize, like, oh, well, this is what crypto is for in the first place. Like, you guys are going to crash the banking sector expecting that the entire financial markets of the West are going to crash. So all the people that are smart and understand what's going on literally just exit the traditional financial system, and they put their money in things that are going to be valuable in the event that the financial system collapses or becomes more centralized. Think about how that's like the same thing, right? It collapses, becomes more centralized. They want it to be smaller, right? They want it to be smaller so they can have all the transactions going through a smaller filter. And that sort of lays the groundwork for central bank digital currencies and all this stuff. So they definitely have a plan. They are executing that plan, but I'm speculating that the thing they didn't account for is that the markets actually are capable of breaking apart, and that's exactly what we're seeing. So the question becomes, why would the NASDAQ be rising with crypto and gold and silver? Well, I've talked about how the NASDAQ and crypto are very much intertwined, but if you look a little deeper beneath the surface, you have to realize that the NASDAQ is essentially just semiconductors. It's all products and businesses that are related to the semiconductors, right? So think about like Microsoft and Apple. What are Microsoft and Apple completely reliant on? Semiconductors. What are crypto miners completely reliant on? Semiconductors. What is anybody involved in tech reliant on? Semiconductors. So this is the semiconductor index. Look at this freaking thing. It's no coincidence that this thing is the most bullish chart of the entire stock market, right? Like, this is now broken above the August high, right? This is a major uptrend. You clearly see higher highs and higher lows. So what I'm sensing here is that if the semiconductors are bullish, right? Of course, the NASDAQ is going to be bullish. Of course, crypto is going to be bullish. So it's a bit of a chicken or the egg situation. Are semiconductors going up in value because that market senses that crypto is going to go up in value? And if crypto goes up in value, a lot of people are going to be willing to invest their money in semiconductors so that they can mine crypto. All these things. It's like the fact that we're seeing surges in value in tech, that's telling you that the paradigm is shifting over, where we're coming into that new phase of financial technology that is definitely going to subvert the current financial system as we know it, because it's an old, rickety system, and it's also centralized. So it's just not, it doesn't even hold a candle to the potential of a decentralized financial system. So all I'm saying is we're seeing bullish activity in tech and crypto because tech and finance are blending together. That is the new paradigm that's emerging. And so then it comes back to like, is the Fed too stupid to see that? Are the bureaucrats too stupid to see that? Sometimes I wonder. I look at like somebody like Janet Yellen, I like listen to her talk, and I'm like, you might be too stupid to see that. Like, you actually might be too stupid to see what's happening, and that you're trying to fight a tide that you're just going to lose, right? So that's what the price action is reflecting here. It's so clearly reflecting that traditional finance is losing against the new financial system that is potentially emerging here, right? Okay, so all that is just, that's really what I want to communicate to you. I will lay one more sort of jaw-dropping consideration on you here, and it's more of like an Elliott wave technical thing. So I've been sort of laying more of like a fundamental analysis here, but I want to just point out one really interesting Elliott wave thing. I was going back and just studying Elliott wave theory and stuff, and I was looking at it with regards to Bitcoin, and something just like jumped out at me that I never really have seen before or heard anyone talk about before. But like, check out the structure of what Bitcoin is, okay? So this structure here, this is known as a running flat. And it's literally a textbook running flat in Elliott wave. Now, the reference I'm getting that running flat from is here. So let's just look at this. This is a great, notice this video that I just randomly came across. This guy's Australian. I love listening to Australian people talk. This came out 9 years ago, right? So it's good to watch like things from the past and then try to like see how those things are describing what's going on right now, right? Because this guy has no idea what's happening today. Like, he made this video without the knowledge of what's going on right now in this moment. But look at this, right? Look at the shape of this running flat, okay? Look at this. So let's pretend right here, where my mouse is right here, this is April 2021, right? This is when Bitcoin topped first, right? And then you had that huge correction, right? And then what happens in October 2021? A new high, right? A new high is set. And then you have the C heart wrencher, which is a huge fall. Like, look, the massive, massive fall, because you're falling from above the previous all-time high to below that A leg of the ABC correction. So a running flat is just a variation on an ABC correction. It is a bullish correction, right? Because the implication is that any ABC correction is going to resolve to the upside. But the thing that's interesting here is that the B and the C leg are just super long, super heart-wrenching. Like, you thought it was going into a new bull market. You thought it was going to new all-time highs because it poked a little bit above the previous all-time high and then just smoked you to the downside, right? Like, just absolutely heart-wrenching on that C heart-wrencher. Extra heart-wrenching because you had made it to new all-time highs. So you're like, oh, I thought we were going to new all-time highs. And then the next thing that happens is you get absolutely killed. So the point is, what happens next? Major upside. Major upside. You just resume the uptrend is what happens. You resume this impulsive uptrend. So look at Bitcoin after looking at this shape. Does that not literally look exactly like what this is? This is an exact textbook example of a running flat. And it's like, okay, you found the bottom, and now you are moving to the upside. This is very likely, at least from just a purely technical standpoint, this is the beginning of literally like a major, major upside move in crypto, very likely. And now that we're seeing the price action of crypto diverge from the price action of a lot of the traditional financial markets, it's like, okay, there's like nothing standing in the way for crypto to actually do some face-ripping moves to the upside here, you know? Because normally we're thinking, oh, well, we got to look at the, broader financial markets, the broader economy. It's like, okay, for the first time, we're seeing a situation where crypto is showing considerable strength against the broader market. And there's a fundamental case why that's going on, right? Distrust in the financial system as we know it, people looking for a new financial system. And it's like that could be the bull case for this running flat completion to just resume this major uptrend that has, been going on since 2009, right? So that's just a huge speculation. Like, just so you know, like, I don't trade on Elliott wave per se. I use it as a guiding principle. It's just one of the many tools that you want to be aware of. But I do think it's worth pointing out in the White Knuckle Report, because I've emphasized Elliott waves a lot. Like, what is this Elliott wave shape? Well, it's literally a textbook running flat. And how did textbook running flats resolve? They resolve to new all-time highs because it's just a variation on an ABC correction. So it's like, okay, yeah, have fun with that. So, good, dude!